Hi ladies and gentlemen, this is Alvin from Dr. Wealth, and today's my topic is about this Neo Group delisting offer. And you could have heard this news by now, and if you are a shareholder of Neo Group, so please watch on and you have a better understanding what this delisting offer is all about, and hopefully you can make a better decision what to do about it. Usual disclaimer, pause and read it if you need to. So this is the offer. The founder of Neo Group, Neo Ka Kiat, together with the spouse, Liu Oi Ping, are offering to buy Neo Group shares that they do not own at 60 cents each. Okay, so we'll break it down later to see whether this 60 cents is a good offer, a bad offer, a fair offer. That will be for later. Okay, let's go through some background first. And they did state that there's an intention to delist it. That means Neo Group will no longer trade on SGX. It will be a fully private company when this delisting is successful. Okay, and then they also have mentioned that if they have hit the threshold to exercise the compulsory acquisition rights, they will do so. Okay, that means that if you do not want to sell your shares at 60 cents because if you think that this is not a fair offer, but if they hit that threshold of getting 90% of the remaining shares that they don't own, then they may be able to activate these rights and compulsory acquire your shares even though you didn't agree in the first place at 60 cents each. Okay, so they have stated this intention to do so. All right, so you can see that they are very bent on taking this company private and fully own the company as much as possible. Okay. Something about Neo Group, it is one of the largest catering companies in Singapore. I believe that you have probably been a patron, or if not your company have been a patron, you have eaten their food before in some of the events that you have attended. So they have a 20% market share. That was what I gathered from one of the interview articles, which I'll share more later, right? Via these 18 brands. I just show you 6 over here. Okay, of course, the Neo Group, Neo Garden is the flagship brand of their catering arm. Okay, in fact, Dr. Wealth have been using Delhi Hub Catering for many years. Okay, so if you have been a Dr. Wealth customer, you've been to our events, you have probably eaten Neo Group's catering food before, alright? And this is the guy, Mr. Neo Ka Kiat. He has a nickname called the King of Buffets. Wow, okay, so that's what a title to bestow to him, probably because he has the leading market share in terms of catering business in Singapore. Okay, and he's not done yet. Okay, he's not ready to rest on his laurel. This is taken from the about page on neogroup.com. Okay, or neogroup.sg. Right, he has ambitious plan, and one of the near-term goal is to achieve $1 billion revenue by 2025, and that's not far, right? We are 2021. As this recording is done, so it's just 4 years more to hit $1 billion. So let's see how far they are from this $1 billion target later. Right, this is a breakdown. Okay, they don't just do catering in terms of their revenue flow. Okay, it's about half. Right, it's about half of their revenue comes from food catering, and it's the one that's growing nicely as well. Right, but they also have food manufacturing, which is pretty flat in terms of the revenue growth, and supplies and trading, okay, which has ups and downs, and food retail, which are the restaurants, are going down on that trend. Right, so food catering is still a very core part and a growing part of Neo Group's business. And this is from Mr. Neo's most recent interview on The Age, 5th October 2020. There was like the past the peak of the COVID impact in Singapore, right? The later half of the year already. And he mentioned that he diversified into other segments like childcare and elder care, right? And that makes sense because instead of having a kitchen, hiring cooks to cook at the childcare center or elder care center, you now offer catering service, so you can do without that kitchen, and they can just deliver the food to all these places, right? You don't need to care about like maintaining a kitchen, cleanliness, maintaining it, monitoring it. So it does take a lot more job off the plate for the principal of the childcare center or the manager of the elder care center. Okay, so there is some of these opportunities, right? And they have moved into it. And there's this tin cut meals. Okay, this is like the tiffin boxes where they send it to houses, so you don't need to cook, right? Nowadays, people are very lazy to cook, and they would just tapao or just buy and from the eateries, or just consume at a coffee shop or what, and get their meal settled. Okay, and during COVID-19 sorry, there's a typo over here. During COVID-19, they saw a 3-4 business increase in this tingkat meal, right? And it's logical because a lot of people are working from home and they try to minimize the need to go outside of their house, right? So getting this kind of delivery meals on a consistent basis, that means it's day in, day out for the entire month, and they will receive all the 3 meals a day. Okay, so that fulfills a need in the market, especially during COVID-19. And there's no plans to delist. He did say in the new interview, right? There's no plans to delist. That was just October 2020. And then now, March 2021 or April 2021, he is looking to delist the company. Okay, and that period, he was already buying back shares. And he did comment the PE ratio was too low. Right, so he was thinking that it's a value stock. He wanted to accumulate more shares. It's a good business because he is operator himself. He'll know how good the business is running and what's the prospect going forward. Okay, and this is taken from their first half of their 2020-2021 results. Okay, this would be ending in around September, if I'm not wrong. Should be September 2020. Okay, that means this is the covering the COVID period, right? March to September 2020, the peak of the COVID impact. And what you can see here, the revenue did drop by 3.3% as compared to normal times. All right, that's not a huge drop. Okay, that's not a huge drop. And remember that he did say he wanted to hit $1 billion revenue, so you need times 2 to make it a full year. So the full year is probably making about 170 million. So it has another 830 million to go to hit an annual turnover of $1 billion. Can he do it? I'm not sure, right? But of course, being entrepreneur, you must be optimistic. You must set audacious goal and you try to hit it and do a great execution, right? To move towards that goal, okay? And what is more surprising is that they were still profitable. Okay, they're still profitable despite the COVID period. Of course, we can say that there was some government assistance from here, right? This other income, probably that's where the government assistance come about. All the job support scheme during COVID-19, right? So was given. But even if minus away this $9 million, it's still a good another $9 million net profit, all right? So it's pretty impressive. Okay, in terms of their execution during the worst of times. And catering business, events are not going on during COVID-19, and yet they can turn a profit during the worst period for a catering business is something to applaud to. All right, and this is the offer price in the offer document. They did say that this offer price was taken as like the highest price in the last 3 years. And if you use the volume weighted average price, is that premium, 10% premium above it. Okay, so they also pictorially show you that the offer price is like the highest level in the past 3 years. Okay, of course, this is the standard things that every investment banker will put in this kind of offer document, right? You always use a volume weighted average price. But if the share price have been depressed, have been undervalued for years, even if you offer the highest price, may still be an undervalued kind of pricing. Okay, so let me give you my views. All right, so this is taken from Finbox, okay, one of the websites that provide data. And the past 5 years, I have 3 lines over here. This is the P ratio. Okay, this is the free cash flow yield, the green line, and then this is your dividend yield. Okay, if you take a look at this, the purple line first, right? This is the P ratio. Okay, it gyrates over the past. Okay, you can see that the P ratio is not high, right? It's at one of the lowest point in the past 5 years. It's just like four times. Okay, it's just about 4 times P ratio, so it's pretty low. Okay, and the free cash flow yield is pretty high, right? Like 30%. Okay, and your dividend yield is about 1.1%. Right? Okay, so the dividend yield is not that high compared to the past, but you can see the scale of the chart. Okay, it's pretty much on the higher side for the free cash flow yield. That means they are cash generating machine, and the share price that you pay for to have this cash generating machine is not expensive. Right? Likewise for the earnings, that they make, the price you pay is just 4 times. It's not expensive as well. So which means they are still delisting at a pretty good offer, if you ask me. Okay, it's still an undervalued price for Neo Group, but of course we can also argue that somehow the market is not pricing Neo Group higher in the past that is what you get. Okay, and of course, as a business owner, they also want to buy low, sell high. Delisting at a low price means they're buying back the company at a low price, right? So it makes a lot of business sense, right? Everyone for himself. Okay, it's nothing to blame any party about it. And you might not have a choice because you may think that the offer is not fair, it's undervalued, it could be higher. But you take a look at both of their joint holdings is at 82%. Okay, so it's very high insider ownership, and for them to delist the company is a very high probability. So my view is that I think this delisting offer will go through, okay, because some people will vote for, will sell, right? Will sell their shares, right? Will accept the offer and sign the document, send it back, and sell the shares, get the cash. All right. And when good enough number of people who do it, eventually they will hit that minimum acceptance level, and they will be able to delist the company. Okay, this is what I think will happen. Okay, so I think there's little chance for shareholders to fight back in this case, given the circumstances. So in conclusion, I do think that Neo Group doesn't need to tap on the capital markets. That means staying listed, right? Neo Group doesn't need to, because if you look at the history since its listing, there were no rights issue or whatsoever. So once they did an IPO, they raised that money. Thereafter, they didn't tap on the capital markets anymore, right? They didn't raise money from shareholders. They didn't issue new shares from there, and that means that they are very internally sufficient. Their business is running well, and in fact they've been giving dividends consistently. That means instead of raising money from the capital markets, they're giving dividends consistently. Why do you want to share with the other shareholders when you can have all the dividends for yourself? Okay, and they can afford it, right? Why not? And why do you have to deal with shareholders, do all the AGM, all the compliances, and pay listing fees when all this money can be saved and generate back, channel back to the business, right, to grow it further? And also low float, because the insider have a very big ownership. You're just handling a very small group of public shareholders. Is it necessary? I think it's not. Okay, so moreover, they also have a very positive future, right? Still have a lot of ambition, as you can see from the founder. Still a lot of growth prospect that they believe in. They want to hit the $1 billion in 2025 in terms of revenue, right? So they definitely want all these successes for themselves, right? Why would want to share with other shareholders who probably didn't contribute anything along the way except buying the shares at IPO, giving some money to the company, and thereafter, as a public shareholder, you're just sitting there waiting for money, right? To be fair, they will start to think about this, and why not we just delist the company, okay, and keep it for ourselves. And this is an opportune time because the share price is low, and they will be able to delist at a very good price, okay. And I also say that because the insiders have very huge ownership, other shareholders have little means to say no. And I do think that this will be a successful delisting, okay? But that's my view, all right? At the end of the day, if you're a shareholder of a Neo Group, you have to make that decision whether to accept the offer. Even if you don't accept, eventually, if they have that rights to acquire your shares, they will do so. So you will sell it eventually, right? If not, okay, if let's say it's a deadlock, all right, they couldn't exercise the right to compulsory acquire your shares when you disagree, they may still be able to delist it if they hit the minimum acceptance level, right? So they can delist the company once they cross the 90% threshold ownership level. And once they delist, you might just become a shareholder of a private company, okay? And a lot of your privileges or rights that's protected by Securities and Futures Act may not be there anymore, okay? There have been cases in the past where certain private companies, after they delist, did have some settlement with the remaining shareholders, right? That comes after a few years. So it's up to you whether you want to fight the battle, okay, or you just want to accept the offer and then you will move your capital elsewhere, right? You just move on from there, okay? So I hope you get a better picture of what's going on for this Neo Group delisting offer, and hopefully it has helped you make a better or well-informed decision from here. All right, cheers, and I'll see you the next time.